Hey everyone, there's a common saying that the next multibaggers are generally those companies that are not very popular in the street and are less talked about. Basically, those companies that are not very glamorous and are quietly building their business. And that's where I came across a very interesting company which is not very popular in the street, or at least I haven't really heard its name before. Because chances are high that if the company is not very popular in the street, then it won't command a very high valuation. So the company that I'm going to discuss today had its IPO just 2 years ago, and since then, the top DIs are massively accumulating this company, and that too on consistent basis, right from 9% to 11, 12, 14, 15, 16, 17, and now 24%. And public has just 10% stake in the company. It's an auto auxiliary company called Sansera Engineering, a small cap auto company with a market cap of just around 5,000 crore, but a well-established business with a track record of more than 40 years. Company's founder, chairman and MD is Mr. S. Shekhar Vasan, who has rich experience of nearly 40 plus years in the industry and hold bachelors from IIT Madras and masters from IIM Bangalore. The reason for Sansera bright growth prospect is due to its aggressive foray into EV components and non-auto component segment that include your aerospace component. So as usual, we'll explore the business model of the company, then we'll look at the leadership, key strength, future growth prospect and key risk. Finally, we'll look at the valuation. But before we begin, just a disclaimer, this is not a buy or sell call. The purpose of this video is only to share my knowledge. And if you find potential in the company, then please do your own research and then take the investment decision. Alright, let's get started. Established in 1981, Sansera Engineering, headquartered in Bangalore, is a manufacturer of components and assemblies that are essential in your engine, transmission, suspension, braking, chassis, and other parts of your two-wheeler, passenger wheeler, then your commercial vehicle, as well as your aerospace, then your off-road, agriculture, and other industry. Now, broadly, Sansera business can be divided in three key segments. First is auto ICE, that is internal combustion engine, that include your petrol diesel vehicle. Second is auto tech agnostic and EV segment. So auto tech agnostic means products that are used across EV and non-EV segment. This is one of the biggest growth area of the company. And third is non-automotive segment. If you look at its products within automotive segment, it caters to two-wheeler scooters, including internal combustion engine and electric vehicle, where its products are used in suspension part, engine parts. Then in electric vehicle, it manufactures suspension parts, driveline parts. Then in two-wheeler motorcycle, it includes engine parts, transmission parts, EV rotor parts, and steering, suspension and chassis part. In four-wheeler, it includes your engine parts, transmission parts, and steering, suspension and chassis part. Then in four-wheeler EV, it includes clutch assembly part and various transmission part. In commercial vehicle, it manufactures various engine parts, transmission parts and braking parts. Then in non-auto segment, it manufactures parts for aircraft that include aerostructure parts, lightning parts, seating parts, engine parts, equipment housing parts and cargo parts. It also manufactures various components for off-road vehicle as well as agriculture and non-auto application. If you look at key clients of Sansera, in two-wheeler segment, its clients include all major auto companies including Bajaj, Honda, Suzuki, Royal Enfield, Kawasaki, KTM, Hero. Then four-wheeler clients include Maruti, Honda, Volkswagen, Fiat, Toyota. Light and heavy commercial vehicle include JCB and Dalmar. If you look at revenue breakup in FY23, auto ICE contributed 78%, tech agnostic and EV contributed 10%, and non-auto contributed around 12%. Within auto ICE, 36% contribution is from two-wheeler, 8% from scooter, 23% from passenger vehicle, and 11% from heavy commercial vehicle. Here, the key focus of the company is to increase contribution from non-auto and EV segment. For instance, in FY22, auto ICE contribution into total revenue was 83.4%, that got reduced to 77.7%. Although please note that it has continued to grow, whereas auto tech agnostic and EV segment contribution has grown from 6.1% to 10.4%. It has doubled in terms of revenue on account of lower base. And non-auto segment has grown from 10.5% to 11.9%. Going forward, company's vision is to reduce auto ICE contribution to 60% and increase auto tech agnostic and EV contribution to 20% and non-auto to 20%. In terms of revenue by geography, around 72% sale is from domestic market and around 28% is from international market. It has 16 plants in India across Manesar, Pantnagar, Mehsana, Pune, 9 in Bangalore and 3 in Tumkur and 1 plant in Sweden. If you look at board of director, S. Shekhar Vasan is the chairman and MD with 40 plus years of experience and PGDM from IIM Bangalore and bachelors from IIT Madras. Then FR Sanghvi is joint MD with again 40 plus years of experience and he's a chartered accountant. Then Ronak Gupta is director with PGDCM from IIM Calcutta and bachelor's from IIT Delhi. Then Muthuswamy Lakshminarayan has masters from IIT Bombay. Then Revati Ashok has PGDM from IIM Bangalore. Samir Purushottam is from IIM Calcutta. So very experienced board. Company's leadership is also very experienced with BR Pritam as Group CEO with 30 plus years of experience. Vikas Goyal CFO has 30 plus years of experience. Praveen Chauhan as CEO has 36 plus years of experience. In fact, the entire leadership is highly experienced. Now, if you look at the financials, in FY19, company had a revenue of around 1600 crore and then it dipped slightly due to COVID, but recovered sharply with nearly 2000 crore revenue in FY22 and now at 2346 crore in FY23. Although margins have slightly reduced from pre-COVID levels of 18% to currently at 16%. Although in June quarter, margins have improved to 17%. Now, net profit also dipped during COVID, but again recovered to 110 crore, then 132 and then 148 crore in FY23. Company's fixed assets have also increased consistently from 1000 crore to 1100 crore, 1200 and now at nearly 1400 crore. Company is consistently generating positive cash from operation, which is at 256 crore in FY23. Although its cash conversion cycle has slightly increased in FY23, but working capital days have remained stable. On profitability, company has an average ROE and ROC of around 14%. So there's still need for improvement. And company has a debt to equity of 0.69. Overall, the financials are looking steady and growing consistently. Now let us look at the future growth prospects. If you look at the future growth, auto industry has seen a sharp revival in 2023 after a prolonged slowdown for almost 5 years. This revival is across your supply and demand side, where on supply side there's increased availability of semiconductor chips and on demand side there's a sharp uptick in demand, especially in Indian market. Although the European market has still not recovered completely. Now within auto segment, in the medium term, there will be demand across your internal combustion engine vehicle as well as electric vehicle. But the future is all about electric. So auto companies have to ensure a smooth transition from internal combustion engine to electric vehicle segment. And that's where Sansera has also diversified into EV segment as well as in aerospace segment. This image on screen shows the transformational journey of Sansera, where green color represents EV tech agnostic and aluminum products and blue color is for non-auto components. And you can see in last 4 to 6 years, Sansera has launched multiple products in electric vehicle and non-auto segment. Going forward, company's plan is to continue to add new products in its portfolio. Sansera has completed setting up a dedicated facility for hybrid and electric components in their existing plant in Bangalore. Moreover, it has recently established a new aerospace and defense facility in Bangalore to expand its non-auto business. 2/3 of it is for aerospace and 1/3 for defense. Company already has strong relationship with top aerospace OEMs and this would create a revenue potential of around 350 crore at its peak. And currently there's an order book of 104 crore. And the total order book of the company is at around 1690 crore as of June 23. On capex side in FY 22-23, company had invested around 244 crore in the non-internal combustion engine segment for your technological upgradation and adding production line. And for FY 24, company has planned a capex of around 300 crore, out of which majority of would be in your non-auto and non-internal combustion engine segment. Overall, the target is to increase contribution of electric vehicle from current levels of 10.4% to 20% and non-auto segment from 11.9% to 20% in the next 3 years. Company has also recently acquired around 21% stake for rupees around 20 crore in MF RFIC, which is R&D based manufacturer of next generation radar by leveraging machine learning and artificial intelligence. So that will also give some exposure in defense side. So overall, we can expect around 20% CAGR type of consistent growth in the company over the coming years. Now let us look at the key risks. So the first risk I find in the company is customer concentration risk. Currently around 48% revenue of the company comes from top 5 customers. So any loss of business from top customers can impact the revenue and profit. Then second risk is threat from electric vehicle sector. While historically Sansera was focused on ICE vehicle, the rise of EV has created both threat and opportunity for the company. Threat because as of today around 78% of business of the company still come from internal combustion engine, but the plan is to reduce this to 60% in the next 3 years and focus on EV and non-auto segment. So that would be a transition from internal combustion to electric vehicle in a phased manner. Then third risk is exposure to cyclicity in auto sector. Now auto sector is cyclical in nature where demand fluctuates as per the economic situation. So similar to all other auto companies, Sansera is exposed to cyclical nature of auto industry. Although currently the demand environment is looking attractive. Moreover, to reduce this risk, company has planned to have around 20% exposure from non-auto sector. Finally, Sansera has a current debt of around 804 crore for its capex plan. Although this debt to equity is currently under control at 0.69, but still I feel there is a scope for reducing this debt. Finally, if you look at the valuation, Sansera Engineering launched its IPO in September 21 at rupees 744, and today it is trading at around 940 rupee and commands a market cap of around 5,000 crore rupees with a PE of 32. So in last 2 years, there is not much growth in share price because of various challenges, but now the future is looking very promising and hence valuations are also reasonable. In last 8 quarters, promoter stake has slightly reduced, but the key selling is from FIs from 45% to 30%. Now the reason is because its top 2 FI holder are PE firm that invested in 2013 in Sansera. So they have made good profits and hence reducing their holding. Apart from this, it also includes other top FIs like Government of Singapore, Nomura Trust, Morgan Stanley, and overall the FI holding is still quite high. Now look at the sharp increase in shareholding from DIs from 9% to 11, 12, 14, 15, 16, 17 and now at 24.3%. Within that, it includes your Axis Small Cap Fund, ICICI Prudential Small Cap, Kotak Small Cap, and look at the way Kotak is increasing stake in the company. Then you have SBI Life Insurance as well. So entire stake sale from FIs is completely absorbed by DIs, and public holding in Sansera is just at around 10%. And that's why I said Sansera is not that popular among retail investor. So 90% stake are with promoter, FIs and DIs, and that speaks a lot about the quality of its business. Overall, if we conclude, Sansera is a leading auto component manufacturer with decades of experience and years of relationship with top auto players, not just in India, but globally. Company has very experienced leadership with top promoter pedigree. After years of slowdown, auto industry is looking in very good shape and auto component companies should benefit from this tailwind. Moreover, Sansera is clearly focusing on growing its electric vehicle and non-auto business, especially from aerospace, that would play a crucial role in next leg of growth. And hence, company can sustain a good growth in the years to come. So I find it very promising as a portfolio grade stock to hold for long term. The best part is that it's a small cap company with market cap of around 5,000 crore and commands a PE ratio of 32, which is also looking very reasonable. And the fact that top DIs like Kotak, ICICI, Axis, SBI are consistently buying it also instill a lot of confidence in the company. So yeah, this is it for this video. Now tell me in the comments, what do you think about Sansera? And which auto companies do you have in your portfolio? I hope you'll find this video useful. I'll see you next video. Till then, take care.